and welcome to the Wealth Guard Show. I'm your host, Tom White. Well, the volatility picked up again this week as we started out higher on Monday and Tuesday, and then things started to fall apart here on Wednesday, Thursday, and Friday with the stocks heading down and sharply. We'll take a look at that here in our economic mechanics. And we'll begin with the US dollar. And on a daily chart of the US dollar, down below point number 1, those stochastics have picked up. They crossed that 80 line here and they're looking bullish. We gave it a green mark. Above that, point number 2. We're getting confirmation as the MACDs are ascending higher and the histogram bars are rising, so we gave this one a green mark. Up top, relative strength index, point number 3. Got a little bounce off of the 70 line there. We're going to wait for that one to pick up, but for now we gave it a yellow mark. And over on the weekly chart, things looking pretty strong down below point number 1. Those stochastics are soaring higher, challenging that 80 line here, and it's looking like a cross. Give this one a green mark. Above that, point number 2, the MACDs, they're ascending higher, and histogram bars are lifting. Gave this one a green mark. And up top, relative strength index. Took out the 50 line, it's challenging the 70 line now, it's heading higher. We gave this one a green mark. And summing up the US dollar, we analyzed the daily chart and the weekly chart. On the daily chart, we found the stochastics and the MACDs. They were bullish. We gave them a green mark. On the relative strength index, that was neutral. We gave it a yellow mark. Over on the weekly chart, stochastics, the MACDs, and relative strength index, they look real strong. They were bullish. We gave them all green marks. And for a total, we had 0 red marks, 1 yellow mark, and 5 green marks for the US dollar. And now we'll look at the commodities represented by the CRB Index. And on the daily chart of the commodities, down below, point number 1, we're still heading lower here on those stochastics. We broke through that 20 line here, and we see no strength at all. We gave it a red mark. Above that, point number 2, the MACDs, they're falling, and the histogram bars, they're dropping too. We gave them a red mark. Up top, relative strength index on point number 3, it's dropped below that 30 line. Things are just not looking good. We gave this one and all of them a red mark. And over on the weekly chart, down below, point number 1, doesn't look good here either. We tried to challenge that 50 line there, and we failed. Got a bearish signal here. We got a red mark, point number 1. And above that, point number 2, this MACDs, they're falling, and the histogram bars are dropping. We gave this one a red mark. Up top, relative strength index, it bounced off that 50 line. It continues to head lower. It's now challenging that 30 line here. We don't like this at all. We gave this one a red mark. And summing up the commodities, we analyzed daily chart and a weekly chart. This was easy. The stochastics, the MACDs, and the relative strength index on the daily chart and the weekly chart were all negative. They were all bearish. We gave them a red mark. For a total, we had 6 red marks, 0 yellow marks, and 0 green marks. Not looking good for commodities here. Remember, we pointed out a couple weeks ago here, we got that death cross here on the commodities. This is going to be the result. And now we'll take a look at the 10-year Treasury yield. And on the daily chart of the 10-year Treasury yield, down below, point number 1, those stochastics, they're giving us a slight bullish signal here when the green line crossed over the red. They're in bearish territory, though, below that 20 line, so we gave this one a yellow mark. Above that, point number 2, we got the MACDs. They're looking like they're settling in here, and the histogram bars are also doing the same. They're flat. We gave them a yellow mark. Up top, relative strength index. We bounced off that 30 line here. We're headed for a challenge of that 50 line. We have a little resistance ahead. We gave this one a yellow mark. And on the weekly chart, we continue lower in point number 1 in those stochastics below that 20 line in bearish territory. No sign of any strength at all. We gave this a red mark. Above that, point number 2, the MACDs, they're still falling, and the histogram bars, they're dropping too. We gave this a red mark. And up top, relative strength index, we're trying to challenge that 30 line here, but we've been hovering below it. We gave this one a red mark. And summing up 10-year Treasury yield, we analyzed daily chart and a weekly chart. On the daily chart, the stochastics, the MACDs, and the relative strength index, they were all neutral. We gave them all the yellow mark. Over on the weekly chart, stochastics, MACDs, and relative strength index there were all bearish, and we gave them all red marks. For a total, we got 3 red marks, 3 yellow marks, and 0 green marks for the 10-year Treasury yield, and that means that interest rates have been heading lower and money has been flowing into the Treasuries. And now we take a look at the Dow Jones Industrial Average. And on a daily chart of the Dow Jones, down below, point number 1, those stochastics, They're looking very bearish here. We failed that 50 line. We're headed lower down to that 20 line now. And got a bearish signal all the way. This is a red mark. And up top above that, point number 2, the MACDs, they're confirming the bearish move in the stochastics. We got a cross on the MACDs when the green line crossed over the red. That's bearish. And the histogram bars have fallen below 0 too, so we give this one a red mark. And up top, point number 3, relative strength index has bounced off of that 50 line. It's headed lower, challenging that 30 line now. And this is headed lower. We gave this one a red mark. And you can see we got that death cross to worry about again that we've been talking about a few weeks now on the Dow Jones, and we expect the volatility to continue. And over on the weekly chart, down below, point number 1, those stochastics. Looks like we're headed lower again for another challenge of that 20 line here. This is bearish. We gave this one a red mark. Above that, point number 2, the MACDs, they're continuing lower, and the histogram bars have dropped again too, so we gave this one a red mark. And up top, relative strength index. We were kind of trending sideways here, but we've failed again that 50 line, so we gave this one a red mark. And summing up the Dow Jones, we analyzed daily chart and the weekly chart. On the daily chart and the weekly chart, they were both very bearish, not looking good. We gave them all red marks. And for a total, we got 6 red marks, 0 yellow marks, and 0 green marks for the Dow Jones. It's looking like the volatility is definitely going to continue with the Dow Jones, and right now we're bearish. And so we've been coming up with scores for the US dollar, the commodities, the 10-year Treasury yield on the Dow Jones, looking for where the strengths are and where the weaknesses lie. We did this by analyzing the number of positives and weighing them against the number of negatives and coming to a conclusion that way. And in this week, first place, got the US dollar is, it looks like we're going into cash here. We got 5 green marks, 1 yellow mark, and 0 red marks there. And in second place, it's the 10-year Treasury yield. We got 0 green marks, 3 yellow marks, and 3 red marks. And that means money again is flowing into the treasuries themselves, and that drives the price of the 10-year treasuries lower. And in last place, we got a tie with the Commodities, CRB Index, and the Dow Jones. 6 red marks apiece with 0 yellow marks and 0 green marks. Looks like the volatility is going to continue, and I'm expecting we're going to see lower lows. And we take a look now at our market gauge. The object here is to be as far in the right column in bullish territory as possible and as far away from the left column in bearish territory. And this week, we said the US dollar came in first place. We had 5 green marks on that one, so it's in the far right column here with just a touch of yellow here in the neutral column. And below that, we got the 10-year Treasury yields. It looks like they're headed lower, and money is flowing into the treasuries themselves, pushing up the treasuries and driving down the yields. And in last place, we got in bearish column, as far left as you can go, tie with the Dow Jones Industrial Average and the Commodities. Again, it looks like the volatility is going to continue here, and it's not something we're going to be a part of here, as it looks like we're going to be heading lower. And we look now at our IBD 50 portfolio. And last week when we left you, we had built the portfolio. We wanted to take advantage of a few opportunities that we saw going into this week. And we started out with 5 shares of Apple Computer. We picked up 5 shares of that stock starting out the week at $400.50. And it was Perigo Companies. We started out with 23 shares, $96.35. Visa is the third stock we picked up, 25 shares, $90.85. And Dollar General was the fourth stock we picked, 59 shares, $38.07. Humana was the last stock in the portfolio. We got 28 shares of that stock, $79.40. We usually sell these stocks. One position, the worst performer, is sold each week. And new stock enters into the portfolio. However, we did pull out of the stock market here on Wednesday, so we'll take a look at our performance through that time. Let's see how we did. And our number one performer this week, coming in first place, it's Apple Computer. And Apple Computer started out the week at $400.50 and closed the week at $412.14. Had a total increase in the portfolio of $58.20, or just under a 3% gain. Let's take a look at the chart. And on a chart of Apple Computer, you can see where things are starting to weaken a little bit here down below. Point number one, the stochastics were in overbought territory and got a bearish signal here, and we fell below that 80 line. Gave this one a red mark. Above that, point number two, the MACDs, they're trending sideways now. They're losing a little bit of steam, and the histogram bars have been dropping toward that zero line. Gave this one a yellow mark. And up top, point number three, the relative strength index. We bounced off that 70 line here. Looks like we're flatlining a little, trying to settle in and make a bottom. For now, we gave this one a yellow mark. And our number two performer this week, coming in second place, it's Visa. And Visa opened the week at $90.85, and it closed the week, or we sold it at $91.42. Had a total gain of just $14.25, or a little better than 0.5%. Let's take a look at the chart. And on a chart of Visa, you can see down below, point number one, those stochastics, they're also failing in overbought territory. Gave us a bearish signal, gave this one a red mark. Above that, point number two, we're about to get confirmation of the bearish signal in the stochastics with those MACDs. Green line is moving in on that red, and they're about to cross. That'd be bearish. And the histogram bars, they're falling toward that zero line. We give this one a yellow mark. Up top, point number three, the relative strength index. Looks like we picked up a little support here around that 50 line, but for now, we gave it a yellow mark. And our number three performer this week, coming in third place, it's Perrigo Company. And Treasury Company opening the week at $96.35, closed the week at $95.89. Total loss in the portfolio of $10.58, or just under 0.5%. Let's take a look at the chart. And on the chart of Perrigo, down below, we see a similar trend. Down below, point number one, those stochastics were in overbought territory. Got a bearish signal, and the green line crossed over the red, fell below the 80 line, and gave it a red mark. Above that, point number two, MACDs are confirming that. They're about to anyway, as that green line's moving in on the red. That'll give us a bearish signal, and the histogram bars, they're falling toward that zero line. Gave it a yellow mark. Up top, relative strength index on point number three is bouncing a little bit off that 50 line. Gave it a neutral yellow mark. And coming in fourth place this week, our number four performer, it's Dollar General. And Dollar General opened the week at $38.07, closed the week at $37.08. Got a total loss in the portfolio of $58.41, or just over 2.5%. Let's take a look at the chart. And on the chart of Dollar General, down below point number one, stochastics have crossed an overbought territory, headed lower. Down below that 80 line, now challenging the 50 line, gave it a red mark. Above that, point number two, we got confirmation now with those MACDs as the green line crossed over the red, and the histogram bars have fallen below that zero line. This is negative, we gave it a red mark. Up top, relative strength index is still bouncing off of that 50 line. For now, we gave it a yellow mark. And so Humana's a loser, and Humana would be out of here. And Humana opened the week at $79.40 and closed at an even $75. Total loss in this portfolio this week, $123.20, or just over 5.5%. This is the one that brought us down. Let's take a look at the chart. And on the chart of Humana, down below, point number 1, it looks like the stochastics is starting to settle in around that 50 line here. Green line is taking a little break from its decline, moving in on that red. We gave it a yellow mark. And above that, point number 2, MACDs, they've failed to cross. They're looking neutral here. Then histogram bars have settled down too, above the 0 line. We like that. Gave it a neutral yellow mark. Up top, relative strength index. It's bounced off that 50 line. It looks like we're headed sideways. Gave it a yellow mark. And our final results from this week. It was a short week as we got out on Wednesday, and we did not participate Thursday and Friday. There wasn't a lot of difference, though, since we got out, as things were pretty much flat to the downside with our portfolio. Got down about another % after this. But for now, we started with Apple Computer in first place, got $58.20 gain there. And Visa is in second place with a $14.25 gain. Verigo came in third place with a $10.58 loss. And Dollar General in fourth place would have survived the portfolio, had a loss there of $58.41. The loser of the portfolio this week was Humana. Had 28 shares of that stock, down actually $123.20. That was pretty steep for that stock. Had cash in the portfolio just over $420. We had a loss this week of $119.74, or about 1% loss. Total value in the portfolio now of $11,262.31. Now we remain in cash. We're going to hold on to cash this week too, as things are looking negative in the Dow Jones, or at least volatile. Looks like the strength is in the U.S. dollar right now and the U.S. Treasuries, so we're going to remain again in cash for now. We're going to check in next week. We'll do it again. But for now, I'm out.